good stuff is going up over time and bad stuff is going down over time. And it's becoming like the stock market. If you make money, if you're a good product, if you're growing, you go up. If you don't have that, you go down. And most of the stuff in crypto doesn't have that, so it goes down.
This episode is brought to you by Kraken Custody. You'll hear more about them later in today's episode. As always, investments in blockchain technology involve risk, terms, and conditions apply.
All right, guys. Welcome back to another 1000X podcast. I hope you didn't miss me too much in my absence, but we're back. We're better than ever. Bitcoin defended 100K, and the markets are ripping on the news that the shutdown might be ending. So
yeah,
things are starting to look up. I think, even in my time off, I'm a horrible addict, like a truly horrible addict when it comes to this stuff. I can't look away. And so I was checking prices, staying abreast of Twitter, and man, people got really bearish, Jonah. I mean, the whole world got ridiculously bearish. I think you talked about this with Max on the previous podcast, but this move has really tilted people. We basically sold off in a straight line from 125 to 100, and it seems like for a 20% move, we carted out a lot of people.
Sentiment was pretty dire, wasn't it? I mean, it makes you wonder, like, I think people are still all in on crypto. Like, I think a lot of the community on CT is just 100% of their PA invested in crypto, which is probably the right trade still if you can stomach volatility and you're mostly in Bitcoin. But if you're in altcoins, you're rinsed, and the stress level is high. So I feel like people have accustomed themselves to this trajectory of 3 years of up only, and now we're kind of sideways to smalls down, and that's messing with people's minds. But you mentioned the shutdown ending. Another thing that could end is the tariffs. I mean, if basically I was looking at Polymarket, there's a market on Polymarket that says Supreme Court rules in favor of Trump's tariffs, ? And it's a 24% chance. So in the 76% outcome where the Supreme Court strikes down Donald Trump's unilateral imposition of tariffs as illegal, the mother of all cash refunds is about to hit the United States of America, the business community specifically, and that money will trickle down. It's not quite as bullish as like retail stimmy, but it's close.
Yeah, that's kind of that was actually a thought that was running through my head. Is it better for us to keep the tariffs and Trump hands out a tariff dividend to retail, or is it better to hand that money to the reasonable, level-headed people in charge of running businesses?
Well,
my answer is might be better for us.
Yeah.
If we keep the tariffs, because if you get airdropped a $2,000 tariff stimmy, I mean, you're probably putting that straight into the market. It's a decent amount of money.
Yeah, it's like COVID 2.0. And I think Trump's not trying to distinguish between rich and poor either. It's just like, here's whatever it works out to, $700 billion for every man, woman, and child. This is ridiculous.
Yeah. I mean, what's amazing is how much money the tariffs have made without tanking the economy.
Yeah.
Right? I mean, we don't know for a fact that it won't have, a long-term impact. We might not see if the tariffs stay in, we might not see the impact for another 2 to 3 years, as businesses, potentially don't reinvest cash because they don't have it. All that cash might have gone to reinvestment, building new warehouses, whatever. Fugazi, Ford needs that money to burn. But at least right now, I mean, it's collecting a lot of money and it's not tanking the market because the entire market is AI. The whole market, everything.
Everything is AI.
It's the Sam Altman burn a ton of money trade, which recently has been making me more uncomfortable.
He is
You
such
know,
an
but
unsavory main
the trade
character.
seems like we're like solidly in the middle of the trade, it seems, but it still makes me nervous. Does that make sense?
Yeah, it makes me nervous too. It's like he's the main character, not just of his space, which is, AI or perhaps broader tech. He's the main character of the entire American economy right now. Kind of a little bit like the way that Sam Bankman-Fried was the main character of the entire economy back in 2021 when people were sort of asking, hey, is crypto the future? OpenAI's revenues are between 10 and 20 billion. They're talking about spending trillions. There's a lot of unfulfilled promises in there. So kind of like crypto had a lot of unfulfilled promises when FTX was painting its logo on the whatever that arena is in Miami or stadium or whatever. So, you know, the vibe is very similar for me between SBF and Sam Altman. Obviously, Sam Altman is and both Sam and both Sams had legitimate business careers before very impressive business careers before their current their sort of end state gigs. Like,
Sam Altman's a little bit more real. I mean, I wouldn't say a little bit. He's a lot more real than Sam Bankman-Fried, right? I mean, he accomplished. He's running Y Combinator. It's not a small
Sam built
accomplishment.
something real too before he hyper gambled it all into oblivion. And yes, I agree with you. Sam Altman is more real than SBF, but like still when they interview him on television, okay, fine, he's not like swaying back and forth from overdosing on meth like SBF was, but he's still like, no, I definitely didn't murder that guy. Yeah, definitely didn't kill him or have him killed or how dare you accuse me of that? The
I mean,
OpenAI insider.
kind of a weird thing to ask in the middle of an interview, to be honest.
You're gonna spend
Hey, what happened to that
trillion.
guy that disappeared? I mean, look,
Look,
getting into
put it this
conspiracy
way.
theory stuff, but
Why can't we
look,
have
if I'm interviewing him, I'm probably not asking that question. But
I just
yeah,
want a main
that's why I'm not
character
interviewing.
who's neither of us are clearly, and our listeners hate it when we try. But like, why can't we get a main character who's both legit and normal? Like, do they always have to be this freakish? I don't get it.
I don't think normal people get into positions of power like that, except for maybe Jensen Huang. He
I
seems
mean,
he seems about as normal as it gets for running the largest company in the world.
he's just a guy who worked at Denny's and then now he's the richest dude ever. Yeah.
I mean,
I don't know.
I think it has to do maybe with like how quickly it all happened. Like he had 20 to 25 years of reasonable wealth and like running a reasonable business, and that probably gave him good grounding for this mega like shoot up. Whereas somebody like, well, Sam Altman's younger, but definitely someone like SBF was just catapulted into absolute insanity at a very young age. I mean, younger than I am now. And I still feel pretty young, but I'm 30, but yet he was, 27, 28. You're not equipped to deal with these kinds of things at
Yeah.
27, 28, I think.
You put
So
out some great advice for 20-somethings, Avi. That's the most viral thing you've ever tweeted.
it is the most viral thing I've ever tweeted. I mean, look, it doesn't hold a candle to your story about, whatever happened that I won't repeat, that all of our listeners know about, that I can't repeat for legal reasons, apparently. But
Yeah. We can talk
uh,
about it. We just can't we can't go into details according to my legal team.
well,
That's the details where you get into trouble. But yeah, I had a
anyway, it was it was good. It was sort of one of those tweets that you just like fire from the hip, takes you 28 seconds to write, and you send it off and you don't think about it, and then you come back and you're like, oh wow. Like I didn't spend I didn't craft that tweet. That wasn't a crafted tweet. That was I like spoke from the heart kind of thing, where I just you put it out, and I think it's right now I was dealing with something not related to the markets at all in any way, shape, or form. Some people were asking me that. They're like, "Did you get liquidated?" I did not get liquidated. It has nothing to do with the markets. But I have been thinking about this kind of stuff, and I think it's useful because I've seen so much consternation and sadness on the timeline. I thought it would be useful. I think a lot of these people that listen to the podcast or on Twitter or in crypto are younger, probably below the age of 30, and life is long. But you have to attack it properly. And I definitely I took a very unconventional path to end up where I am. Just went straight into crypto, and I really do think like these are like the most important things you can do. Specifically the ones that I talk about taking action, where like read as much as you can and network as widely as you can, but make sure you don't like delude yourself into thinking like your network are your friends. Like your friends are your friends, and then your network is your network. They're two very different things. So
You're a role model, Avi. People really loved your advice. I recommend everybody go check out Avi's most recent viral tweet. If you're going through anything, liquidation of any sort, financial or otherwise, go read this tweet and think deeply about it. It does also help that our audience is like probably a lot of 20 somethings, and according to my Twitter analytics, like 98.9% male. So
yeah, this is very male oriented advice, to be completely honest. This is not particularly female oriented. It can be. I just think that most of the women that I've come across in my life like don't have the same goals as men. Right, like I think just like in aggregate, we don't have to get into it, but I think in aggregate, like men are more likely to read this and find like, because I think men are men are often more delusional than women. They, like your average 22-year-old guy thinks to himself, I'm going to become a fucking billionaire and destroy the world and rebuild it in my image. And women tend to be like, hey, that's probably not going to happen. So let me focus on reality. But, change does happen. There are a lot of women who do, who do amazing things and change the world. And so this advice can be for them, but I did write it from the perspective of a male.
Yeah, I loved it. I think, there's the women having realism versus men being delusional is probably a theme that applies to the consternation, just bringing it back to crypto, on crypto Twitter right now. It's also probably why women consider crypto trading to be the third least attractive trait in a man, in front of only gambling and pornography.
That survey had to have been produced by a hater. I don't believe it. Because when I talk to women and I tell them I trade crypto, you should see their reaction.
When I flashed my Solana Seeker last night at Bungalow 8,
they don't know what it is, but once I'm done explaining it to them after the 3 hours, they're like, wow, man, you're so cool.
I mean, yeah, basically the crypto market's in for a bit of realism right now. I saw this amazing Glassnode chart. I'll try to pull it up so that they can put it in this recording of OG selling. And basically this tweet around the Glassnode chart, there's a huge concentration of OG selling right now like there's never been before. So a lot of us dreamers in crypto who believe that Bitcoin's going to 1 million are running into this wall of reality hitting the market, which is that a lot of big wallets are liquidating, big wallets that haven't really done anything for a very long time. And there's, whenever that happens, there's this fear like, hey, am I missing something? What do these early visionaries of Bitcoin know that I don't? And my argument is, which we talked about a couple weeks ago, is just because OGs are selling doesn't mean that this thing's going to stop. Basically, this is an IPO moment. This is what the tweet said. It's an IPO moment where Bitcoin has just IPO'd. And now a bunch of early insiders are transferring wealth to new entrants. And that doesn't mean that the price can never go up again. Like plenty of publicly traded equities like NVIDIA, to name one, can 1000x while their stock is available for anybody to trade. And this isn't even the beginning of Bitcoin. This is the beginning of the beginning. Like this is the road to infinite capital coming into the space. And you just sort of there's going to be a ton of dispersion over the course of this process. Bitcoin's a sure bet that I'm willing to gamble a tremendous amount of money on, for me anyway. And the problem with the rest of crypto is that you can go horrendously wrong now. It's not like we're just having everything goes up only alt seasons now. Like we're going to have a few winners, and most tokens are just going to go straight to hell. But to Max's point from last week, shorting is also an extremely perilous, fraught game.
Looking for secure, regulated digital asset custody? Kraken Custody delivers institutional-grade qualified custody for institutions and high net worth clients. With multi-layer security, your assets stay safe, fully segregated, and always under your control. Trade, stake, and transfer directly from qualified custody thanks to Kraken Custody's seamless integration with Kraken Prime. Discover qualified custody built for performance at kraken.com/blockworks. Not available in certain geographies. Custody services provided by Kraken Financial, a Wyoming-chartered special purpose depository institution, and deposits are neither insured by nor subject to the protections of the FDIC. Crypto trading involves risk of loss. View legal disclosures at kraken.com/legal/disclosures. The machine economy is here. Devices are monetizing data for their users all over the world. Tokenized robots are generating revenue for token holders. The first machine economy free zone is live in the Emirates, and it's all happening on Peaq, the machine economy computer. Head to peaq.xyz, that's peaq.xyz, to find out how you can benefit from the age of automation, or click the link in the show notes to find out more. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Yeah, in order to short, you have to be extremely tactical. You have to be a trader. You can't invest in a short, right? Like you can invest in a long, but you can't invest in a short. And what do I mean by that? Well, a few things. You can look at metrics to go long. You can look at metrics to say, okay, I mean, I was just looking at this earlier, outstanding loans on Aave are hitting all-time highs. Maple Finance keeps sucking up capital, and they keep growing. And you can look at those things and you can say, okay, well, the market might not appreciate it now, but if this keeps going the way that it's going for the next 6 to 8 months, man, this is, like, I'll be able to eat the pain, and if it goes down 50%, I'll buy more, and I can go invest. On the short side, freaking Cardano was like a 20 billion market cap for 8 years. Like,
Yeah.
Tron, I mean, you really have to be tactical. Like you can't hold shorts in the crypto business. I mean, you can't really hold shorts in the equity business either now, because we're just in like an everything bubble. I mean,
You can short them versus SPYs though, because equities do underperform the index. You can do pairs trades. Maybe that's what we should do, Avi. We should become like the Jim Chanos of crypto. We should just short. We should be long Bitcoin and short.
It's just too painful, because especially when and you can't short anything. Like the best shorts that I find tend to be low liquidity. They tend to be low liquidity, and so you can't put on a tremendous amount of size. Really, the only way, and going back to the tactical point, the only way to short effectively, in my personal opinion, is to have a good handle on flows. And I've talked about this in the past, but if you can track down, okay, WorldCoin is getting $40 million a week dumped on the market, you can take advantage of the flows. But you have to get out when the flow, you're constantly monitoring, right? It's like, okay, well, I think a lot of people are going to sell this asset for X, Y, and Z reason over this X, Y, and Z time period. Therefore, I'm going to go short it and maybe buy some Bitcoin against it to reduce my risk profile in case the broader market goes up, right? Like that's the only way that I would ever short in crypto. Just because, and that's how I do short in crypto. Because I do take shorts. Or, you're super tactical and you're like, okay, I think, a piece of news comes out about an asset, and the asset's up 40%. And you're like, that's insane. Like, this makes no sense. I'm going to try to short it here and cover 10% down, like by the end of the day, right? Like then, shorting news is actually a great strategy, but all these things are tactical. There will be no Jim Chanos, because it's way too easy for a total scam to just like 5x. I mean, yeah, it's tough.
You can look at VC unlocks though, right?
Yeah, no, but I'm saying that's the only way you could do it is by looking at VC unlocks.
Is there a way I'm just brainstorming here. I've never talked about this or thought about it before. Is there a way to compile VC unlocks? I know some platforms have done it. The TIE, maybe Blockworks Research, not sure. Where you just have all the VC unlocks lined up, and then you could create some systematic strategy that just shorts them versus Bitcoin. Because you don't want to be short versus dollars in case crypto as a whole goes up, but you just short them versus Bitcoin ahead of unlocks, and then covers like a week after or something. You could maybe build a systematic strategy around that and tokenize it.
I looked into this. It's hard to maintain. Part of it is that you're not actually sure when, like if the VCs are going to sell, so you have to like assign some sort of understanding to, okay, yes, this coin might have 1 billion unlocking, but how much is being sold, right?
Yeah.
That is a question that requires work. It requires a lot of phone calls. It's pretty manually intensive. It's much better if you have analysts do it for you. I just think that the bang for buck, like for your, for your average person out there, like for the person listening to the podcast, like you don't need to short, man. Like, if you're a sophisticated market participant, then, which you guys all are after listening to this podcast, of course. But, if you're trying to build a trading desk and you're trying to build revenue streams, like you're trying to turn trading into a business, then yes, obviously shorting has to be an integral and core component of this, especially pairs trading. And there are good pairs trades out there. I mean, one of them, which you beautifully outlined, was the AERO ENA trade. The VC unlock, like everyone gave you so much shit. I mean, this is like I want to hammer this into people's heads. I want to like hammer it in people's heads. The more hate you get for taking a trade, almost always makes, like, it's directly correlated with the quality of the trade. Right? If you're taking if you put out an idea and you get ripped apart for it, and it's not like a truly stupid idea, right? Like it's like you built some sort of model, like you did, you actually thought about it. But if you put in effort, you think, okay, maybe I have a good trade thesis, and you put it on Twitter, and you just see it getting ripped apart, you're like, so you gotta know, I like this more now. I like this way more, right? Unless somebody tells you, oh, you're wrong because you miscalculated this, right? Then fine.
Yeah.
But like, the ENA shows are out in force, and guess what it's done?
Nothing. VC unlocks, zero additional uptake. No one cares. I guess, people like to hate on me and say, like, Ansem replied to my tweet. I just wrote a tweet, ENA, with a picture of the chart puking. He wrote bottom, okay, Jonah's a counter indicator, whatever. The reason why I like Aerodrome and not ENA is because one represents institutional uptake and more assets getting traded on chain rather than less, which is a theme I can get behind. And the other is like basically a protocol that's linked to, that performs when there's more TVL. And in order for there to be big TVL, you need big institutions to park big capital on that platform, which no institution will ever do because it's a public protocol. It's not private, like one of the much vaunted privacy chains proliferating these days. And the other thing is, like, the yields just aren't good enough for institutions to take that much risk. And also, Aerodrome, you're looking at 1 or 2 billion valuation. This thing's like 5x that. So that's why I kind of think in terms of what's going to stick for DeFi versus what's not going to stick, Aerodrome is just a much, much better long-term play. So I'm, full disclosure, I'm long Aerodrome. I have no ENA position because shorting tokens, like you said, even super garbagey ones, requires more attention than I'm willing to give to crypto at this particular moment in my life. And so I don't, I didn't put on the pairs trade. I'm just long the drone. And I think that it's kind of cool, actually. The Aerodrome core contributing team, I think they're called Dromos Labs. They're like doing a big conference in New York. I'm going to listen to a few of the speeches live. They've got Vitalik there. Basically, I think the future of Ethereum is Aerodrome and Base. And base isn't really something that you can profit from as an individual retail trader. Like you can buy Coinbase at 100 billion valuation or wherever it's trading. You can buy the base token when it comes out and potentially expose yourself to plasma XPL like ICO downside. Or you could buy Aerodrome, where basically I think it's still ridiculously cheap relative to where it should be. So that's one of my, one of the I'm long Hyperliquid. I'm long a few of these like plays from lower prices that I think are great, but it's a tough market to be long lots of different altcoins. And so I think you have to tread really carefully. I always used to hate it when people would say, "Oh, be careful with that idea. Don't, oh, I hear what you're saying. I don't disagree, but be careful." Like I used to hate that because it's so non-committal. But in this case,
Whoever you were impersonating is the most annoying person on the planet. I don't know what kind of voice that was.
yeah,
That voice enraged me, Joan. I don't want to hear it again.
and it's meant to enrage you, Avi.
Be careful. Yeah. Be careful, guys. Yeah.
Be careful out there. It's dangerous. You could lose.
God.
You could lose all of your proceeds. But I think just all jokes aside, almost everything is going to get nuked in an extremely volatile, unshortable way. You're seeing it happen with NFTs actually. Like the price of NFTs is converging to the price of normal art. There's no reason why a Da Vinci should be worth less than the entire CryptoPunks collection right now. And so that's happening, and you will absolutely see the whatever you call it network premium converge to actual realizable asset value for a lot of these chains over time, especially as creating a chain has become so commoditized and easy that it's not like Solana is the Ethereum's New York and Solana's San Francisco or whatever. Like people can just build their own chain for whatever app they want to do.
I speaking of like building your own app, and I've got a lot of thoughts based on what you said, but one of the things that immediately popped into my head is we talked about the death of crypto a while ago, and I think my theory is playing out now. It's like we're seeing it happen real time. There is less correlation in the market. There's just less correlation. Good stuff is going up over time, and bad stuff is going down over time. And it's becoming like the stock market. If you make money, if you're a good product, if you're growing, you go up. If you don't have that, you go down. And most of the stuff in crypto doesn't have that, so it goes down. I mean, like if you look at Hype, you look at, AERO's holding, you look at Syrup. Syrup's a great example of this. Syrup doesn't even trade with the market. It barely trades with the market. It trades with the market in those moments where it goes down a lot, like when you get a liquidation wick. But that's why I view these prices here as just such a good opportunity to buy, like just to buy, right? And hold and get into the things that you like that are good. Now is like, I don't think you should be scared. This might be controversial, but I don't think you should be scared of a drawdown. Even if Bitcoin goes to 80K, it's possible Syrup, Aave, Morpho, AERO, well, maybe probably not AERO because it's more trading related, but like there will be assets that will be up, even in that scenario, in my personal opinion. It might not happen immediately, but if you look at a chart over a 6 to 12 month time period, I think that's very likely to happen. I think we're going to get one of those so-called K-shaped recoveries. So now's the time to just go deep and dig on the stuff that matters. And I repeat myself, and I say this on every podcast, but it's like the people don't learn. Like everyone's freaking out about Mega ETH, and Mega ETH is yet another L2 that just so happens to have Vitalik's name attached to it. It doesn't matter. Mega ETH, nobody will care about this in 2 years. I'm telling you now. I'm sorry. And that's not because I didn't get an allocation. I didn't even know it was, barely knew it was a thing until last month. I just don't think the world needs another L2. I think the world needs products. Like the issue is not and has never been, oh, we need to make this faster because they're applications that everybody would use if it was faster. The issue is building the applications that people want to use. Every base is fast enough, right? Like you scale it up 10 times, who cares? That's my take.
Yes. Like I was waiting for you to finish. Yes. Every single word of that. Like frame it and hang it in the loop. And
Maybe not. I don't want it to get stolen.
and then it gets stolen and then you get it back and you hang it again. Like I couldn't agree more. Basically, the reason why I agree is, first of all, even if the world did need another L2, L2s are uninvestable. We learned that from Polygon back in the previous cycle. Like no matter how hyped, no matter how many partnerships with Starbucks and whatever the hell else they did, the tokens just go down only. They're down and to the right. And why is that? Because there's no shortage of block space right now. This is not Ethereum in November or May of 2021 when it would cost you $138 to execute a transaction on the mainnet. This is an era where there's just too much block space everywhere and not enough users, basically. There are a few people really genuinely trying to solve that problem. So I think if you're going to go out the risk curve, invest in applications. And K-shaped recovery is definitely how this is going to play.
Looking for secure, regulated digital asset custody? Kraken Custody delivers institutional-grade qualified custody for institutions and high net worth clients. With multi-layer security, your assets stay safe, fully segregated, and always under your control. Trade, stake, and transfer directly from qualified custody thanks to Kraken Custody's seamless integration with Kraken Prime. Discover qualified custody built for performance at kraken.com/blockworks. Not available in certain geographies. Custody services provided by Kraken Financial, a Wyoming-chartered special purpose depository institution, and deposits are neither insured by nor subject to the protections of the FDIC. Crypto trading involves risk of loss. View legal disclosures at kraken.com/legal/disclosures. The machine economy is here. Devices are monetizing data for their users all over the world. Tokenized robots are generating revenue for token holders. The first machine economy free zone is live in the Emirates, and it's all happening on Peaq, the machine economy computer. Head to peaq.xyz, that's peaq.xyz, to find out how you can benefit from the age of automation, or click the link in the show notes to find out more. Shout out to today's sponsor, Katana. Katana is a DeFi first chain built for deep liquidity and high yield. No empty emissions, just real yield and sequencer fees routed back to DeFi users. Incubated by Polygon Labs and GSR, Katana is launching with notable ecosystem of primitives, assets, and partners like Morpho, Chainlink, and more. Katana's 1 billion cat campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. As always, investments in blockchain technology involve risk, terms, and conditions apply.
So a lot of people in crypto, I talk to on a daily basis, and they're like, "Hey, Jonah, how can you still be so in love with Bitcoin at 100K? Like the upside's just not there. There's just so much less reward. The risk reward is so terrible. So I have to go out the risk curve to get bigger returns that I like." And my response to them is like, yes, the reward is lower at 100K than it was at 20K. We all know that. But the risk, okay, fine, the price is 5x'd, but the risk has gone down more than the reward has gone down. So I think if your reward is potentially 60 to 80% lower, your risk is like 90 to 95% lower. Like we're not going to have nobody's talking about a Bitcoin goes away forever moment anymore. There's quantum, there's blah, blah, but like it's just not going to happen, right? I think if it's trading 70K, every single person who missed the first 3 cycles is going to be buying with both hands, the people that get it now, which is basically the entire world. So I just don't think we draw down 30% from here. I'm willing to, I think if we were trading 70K, I would allocate 80 to 90% of my liquid net worth to Bitcoin. Unless there was something new that had, unless it traded down there on a quantum hack or a 51% attack, if it just traded down there on,
Oh, that wouldn't be great. I wouldn't like.
yeah, I wouldn't bid it there. But then if it just traded down there idiosyncratically with stocks on the highs because of OG selling, I would go all in. And
I want to.
basically, yeah, go ahead.
Yeah, and I do want to make a point, like a useful point here, for you traders out there to like keep an eye out for the next time. Is this is a very different market. The participants in this market are much larger. They move slower. They are more methodical, and they are less prone to like day-to-day FOMO. And so when you think about it from that perspective, you kind of have to buy when you get these like 2 sigma moves, 3 sigma moves, because the way that the market is now, the participants, is that people lighten up when stuff goes up 30% and they buy back when stuff goes down 30%. Previously, for example, if ETH goes down, and this is, I'm talking like tactically, right? Like on like a tactical level. If ETH goes down 11% in a day, like you can probably buy it at 10% down and feel very, very confident that at some point in the next 3 days, it's going to be higher. Like that's a good trade that I think the market participants haven't necessarily caught on to yet. Is people are now conditioned, and big money is capable of buying Bitcoin and ETH specifically when they're down a lot. And so you probably don't get like 20 to 25% nukes like you don't get those like 3 candles in a row that's like boom, 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 like destroying you. I say this because ETH went down, I think it was like what in one day. In basically one day it went down like 20%, right into a support level at 3K. Like you kind of have to be buying like 31, 32 for a trade. Like if you're a trader, like you have to be thinking about this kind of stuff. It's like, when you get those huge moves, like even if it continues down, like I'm just going back to the chart, like even on October 10th, right? Like you buy the day after October 10th and you got a 20% move up like right after. Like I think that like that's what's happening now. Like even if you get these massive sell-offs, people are like trained to buy the dip previously. Like if you go look at the charts from like 2021, 2022, 23 and before, because it was so retail focused, everyone would just rush for the exit at the same time. And unless you were already in an uptrend, like once the downtrend started, you kind of said, get the fuck out. Like you're not touching this stuff because retail is just panicking and just shoving everything out. That still happens in alts, but it's not going to happen in BTC and ETH and even like Sol to an extent, as much. So just a trade that I noticed that I'm sharing with the community that
Yeah,
I
I
think
agree.
you can pay attention to in the future.
I used to hate buying dips in crypto because previously you never knew how far it could fall as people just rush for the exits on what is ultimately speculative technology of potentially not that much use to society. Now that it's clear that the world is going to run on blockchain and Bitcoin is going to be an alternative reserve currency, the question is when, not if. You can dip buy. So I'm kind of revising my old thesis. I used to say like, hey, wait for it to bottom out and to start, smoothly grinding higher before you get in. And now I'd say I still have that thesis for alts, but for most alts, but for Bitcoin, ETH, and Solana, the majors, like you can buy a dip, like even a violent one, and as we saw in 1010, you're golden if you do that. As far as the K-shaped recovery, I really like the confidence of a hyperliquid or an aerodrome where the tokenomics result in higher prices with an exogenous buyer, actually less aerodrome, but more hyperliquid. You have basically fees get used to buy and burn hype tokens. So it's nice to have like, instead of just VCs selling and retail or maybe some institutions buying, you have another buyer. You've got the foundation buying and burning, right? It's nice to invest in those tokens on dips because it gives you confidence that you're going to be able to weather a little more volatility, provided the product itself doesn't die. Where I take issue with certain crypto traders in the market buying all kinds of garbage right now on dips or in this supposed mini bear that we're in, is that I think a lot of these projects are just going to continue to sell off just because you aren't comfortable betting on $1 million Bitcoin, which would be a 10 bagger. Okay, maybe you think it's only going to 300K and you're going to get out by 200K and you still want to make 10x instead of 2x. You go and you buy whatever the main character of the hour is shilling on crypto Twitter, some meme coin or meme coin equivalent. Like I think all of that, I think that trade is dead.
Well, you're seeing the evolution of the trade right now with privacy. Like I think the Zcash rally, um, I was wrong about the legs. I think specifically what I said is, I actually really like Zcash. Like I think it's a great. I mean, I've I've loved Monero, as listeners of this podcast know. I've loved Monero for a long time because it's the one that's actually used in like privacy circles. Now it
It's
looks
better
like
than Zcash. The architecture of Monero is legitimately more private than Zcash.
I
Zcash
don't
is
think
like
that's true.
really?
I think that's the opposite. Yeah, I'm fairly no. Zcash is so Zcash is the architecture is more advanced than Monero, in that like it is literally a blank slate. Like you can't see anything. Monero uses obfuscation privacy, where it's possible to crack it if you have huge computational resources. It's like potentially nobody's proven it, but it's not an impossibility. Whereas Zcash is like basically impossible. The issue is that we actually didn't know for a while if it was compromised because of the trusted setup. Basically, there's actually a great Radio I mentioned this. There's a Radio podcast about the trusted setup. Super good. Came out in like 2021 and 2022. It like talks about the origin of Zcash. Highly recommend you guys go listen to it. But Zcash is a very good technology, and I'm a little ashamed of missing it because I've been such a fan for such a long time. It was just such a dog. But now I think it's here to stay, right? Like I think it captured the mindset of people. It was ridiculously undervalued, like really undervalued. Maybe people start using it now, right? Like I think because it captured mindset, like it is a good piece of technology. It is a good coin. It has good, it's good architecture. It should be used, as should Monero. Like these things should be used. So I do like the idea. I've always liked Monero. I still own a little bit of Monero.
Yeah, I mean,
I think that the privacy narrative is really good. Where I was going with this is the trade has shifted, I guess. Like there's still always like the hot thing of the moment. Now, like every coin that has ever previously branded itself as potentially tangential or related to privacy is just fucking gunning for it. And that again is like the roulette. So it still happens. And I think if you saw Zcash run up to 700, you should have been buying Monero. You probably need to go buy all the other privacy stupid shit out there like Rune that might run as a trade. But it's kind of like a better version of the meme coin trade, at least. At least it's not like a squirrel that's being pumped.
yeah, there's a product. There's an
there's an idea at least behind it. I mean, most of these things are going to be completely useless, but yeah,
I was chatting with,
that's my take. I'm actually quite happy about the privacy narrative.
me too. I mean, I was chatting with a privacy expert, internet friend of mine. His name's Smoke58, SMOAK58. Go follow him on Twitter. He's smart. He wrote, I was just asking him about Zcash versus Monero, and he says Zcash isn't the answer. It's riddled with holes. XMR, which is Monero, if you really want privacy, you can't hold that thing long term. You just need to pass through it via Trocador aggregator as and when. So, I guess there are always off ramps. I don't know how right or wrong Smoke is, but basically, like there are points of weakness and failure, but if you really need to move money, you're still trading. Like nobody owns Monero natively or earns it natively. Like you're probably putting fiat or Bitcoin into Monero or Zcash. And so there's going to be a record of your transactions. So I'm a little skeptical of the privacy. And then if you want to spend it, you're probably converting it back into Bitcoin Tether or Zcash, or sorry, or fiat on some venue that will then have a record of who you are. So I'm not a privacy
Sure,
expert.
I don't know if there are ways around it, and I wouldn't advocate anyone to do anything. But I'm sure if you dig deep enough, you can find out how to do that.
To me, like I, I I guess there is another narrative of like totally clean institutional privacy. Like my friends at DRW have been pumping Canton for a very long time. I wonder if that's an investable thesis. I feel like it's mostly for the VCs who have been in it forever, but I don't know. I mean,
If you're on audio, I'm making a face right now.
yeah, I
I
don't
don't know,
know
man.
either. I think
I think
basically
the ultimate.
privacy is a narrative that will be investable. I'm just not sure that buying Zcash on the highs, if you missed it like I did, or Monero here, or trying to like lift the highs on whatever Canton decides to launch, which is probably imminent, is a good idea. I think it's probably going to look a lot more like what happened with Plasma, where stablecoins were a hot narrative. The investable retail asset prints at an insane valuation, and it crashes 80%, and then you can probably buy it. So I think maybe a little bit of patience will pay here, or VC investing in new privacy narratives that are likely to blow up later. But your entry price is better.
I also think just like buy more Monero, man. You know where you can buy Monero? Kraken.
The crack.
Kraken trades Monero. So if I was you and you want exposure to privacy, log on to your Kraken account. If you don't have one, make one.
Go get one.
Go get one. And log in and buy some Monero. I know they're our sponsor, and I normally I don't talk about, like, I would never do an ad read, but it is actually the only place that you can buy Monero that I know of that is not sketchy. So, like, they are a sponsor for a reason. They're not so bad, you know.
Yeah.
Um, Although I'm just like looking at I'm looking at Bitfinex for the first time in a long time. We got to talk about that on the next podcast because what the hell is going on with Bitfinex? They're shouldn't they be having some success because of Tether? Like, what happened with the Leo token?
I had Bitfinex as an exchange filed away in my drawer under W for who cares, but as a Tether related, Tether adjacent entity, I'm obviously very happy for them and all of their families in Lugano and all of their boat crews in the south of France. Like I'm sure that it's a money machine because of Tether. Does it matter what they do as an exchange? Like that's not what the real use case there is.
I mean, it's just that they're so tied at the hip. Like you'd think that Bitfinex, I just looked at Leo, their Leo token. It's been sideways for a full year, so maybe not the right, or maybe it is the right. I'm gonna do
Zcash was sideways for how many years before it suddenly?
It wasn't sideways; it was down, Jonah. It was just freaking straight down.
That's what freaks me out about this privacy narrative, Avi. You were very early to the trade with your Monero thesis, but with Zcash, price is the only reason why there's a narrative. You had the wrong coin. Price has led narrative with Zcash. Like obviously, all of the big talking heads on Twitter are repping Zcash now and talking about it as being the next big trade because the price is up, not because they were particularly insightful or had any unique early like investment in Zcash at the right time. Anybody who was in Zcash died, and then it just festered, and then suddenly ripped for probably because we're in a scenario now with the rise of socialism and the rise of just global hemispheres, where if you have a lot of money or if you have very little money, there's reasons to kind of either hyper gamble on the little money side of the spectrum or hide your money on the high net worth end of the spectrum. And both of those, play nicely into what Zcash's offering looks like. I think that's what's going on. But no one's talking about buying Zcash because of some fundamental new thing about Zcash. They're just talking about buying it because it's up. Whereas I think there's like something a little more chilling going on in the backdrop, which is that we might be in for a world where your money gets seized, and that hasn't been the case.
Well,
for
that's not like a that's a good argument for Zcash. So again, I guess what I'll say is that Zcash it's about appreciation. You can walk down the street and there's a beautiful tree, beautiful leaves, beautiful bark. Maybe it has flowers sometimes. And you can walk down the street 150 times and never notice the tree. You could walk past the tree 1,000 times and not notice the tree. But then once you notice it, you're probably gonna look at it every time. You'll be like, oh, that's a nice tree, right? So you can ignore valuable things for a long period of time, but once you notice that they're valuable, genie's out of the bottle. You're gonna look at it every time. It's gonna become part of the fabric of your life, and I think that's kind of what's gonna happen with Z. Like, I don't think I'm always skeptical of this stuff. Like, anytime something pumps, I'm like, it's gonna go. I don't think the privacy narrative is going away. Like, it will die down. It will die down. It will maybe take time, but people now know, hey man, crypto is valuable for privacy. Like, re-enter the consciousness. You can't stop looking. You're not going to stop looking at the tree, Jonah. You're going to keep looking at the tree.
It's there. For me, my can't look away after noticing thing was I had a painting that I got in my 20s. Also, advice for people in their 20s, don't buy paintings. Your brain changes too much and then you get sick of them and want to sell them later. Anyway, it has like tons of logos in it, this like big mist of logos. It was a Ryan McGinnis, and one of the logos was 4 legs arranged in such a way as to be like the Indian or Nepalese symbol of peace. And then if you look at it,
is that a swastika?
It's a backward swastika. Basically it like the ends go to the left instead of the right. And once I saw it, like after owning it for 3 years, it's a really tiny one. that's all I saw. I couldn't see the rest of it, so I had to get rid of it. But basically,
dude, you bought a painting with you're what?
Yeah, man.
You bought a swastika painting?
We own our L's on the podcast. Lately, I've been owning a lot of art-related L's, including my CryptoPunk and this thing.
Oh, yeah, we didn't even talk about that. First of all, I can't believe you sold your punk.
I don't like it that much anymore.
Second of all, that guy reached out to me trying to get me to sell my rock, and I said, kick rocks. I'm never selling this rock.
Well, you like your rock.
I love my rock.
And also, I think the Ether rocks, it's like a better investment than the CryptoPunks. The problem with the CryptoPunks...
there are too many CryptoPunks.
Yeah, that's it.
And the Ether rock...
There's always going to be somebody cheating a floor.
The Ether rock is the first NFT. How do people not understand how valuable this thing is? It's crazy to me. I mean, I guess they do understand it.
Floor now?
It's like 300K.
Huh. That's it?
No.
Oh, man. I want a rock now. I think
that you should buy a rock. I'm not going to sell you money, but you should buy a rock.
Basically, for me, it was like I talked about it a bit on the previous pod. I didn't even like it anymore. I don't feel cool rocking a punk as a PFP. I think it's like it's a very 2021 meta that I don't think will ever come back. It's not cool anymore. It's not like one of those things that endures across cycles. It was really a fad. That particular, like, I have a punk as a PFP, which makes me legitimate. Like, now if you have a punk as a PFP, you're almost illegitimate to the new crew of TradFi entrants. Like, who, you don't want to show your face? Why? What's wrong with you? Or that's what you think is interesting. So, there are lots of reasons to love punks. I still love them. I wish I had like a zombie as my PFP, but like, I think most of the collection is probably going to leak lower because, like you said, there are too many. There's always going to be somebody selling one. But more importantly than that, if you're hanging on to a piece of art you don't like, that's basically the same as hanging on to toxic risk, right? It's distracting. It ties up a lot of capital. In my case, it tied up the capital that I sold it for plus the tax loss harvest because I bought it at higher levels. So, right. Mid 6 figures, or I have a punk, or I have mid 6 figures of liquidity to invest in things that I'd prefer to own. In this case, I prefer to own Hyperliquid. And basically, like, we're in a situation where, a lot of people attacked me on Twitter saying like, oh, you lost money on this, so you're stupid. So why should I listen to your thoughts about punks? The answer is, you shouldn't. My thoughts are just as random and chaotic and probably not that useful as anybody else's. But what I will say is like, I believe in surviving and thriving over the long run. I do not like when I say never give up, that doesn't mean ride every losing trade or toxic risk or piece of art that you can't stand with a swastika in it until the price is zero. Like you can't be that stubborn.
No, you have to.
Mind like
One
water.
has to.
Keep moving. You know, keep cycling, keep thinking and rethinking. And in this case, having a punk was doing nothing for me, and having that liquidity would do a lot more. So that's why I rotated.
You know, I think being a trader, the biggest and most valuable lesson it taught me is I said this on a podcast in 2021. I got it from Ted Lasso. It's very funny. One of the guys that like there's this guy named Luke Martin, who on Twitter, he's an awesome dude. And I went on his podcast and he asked me, like, what advice would you give a trader? And I said, have a memory like a goldfish. And
I
he's
totally
like,
disagree.
no, listen. And he goes, what do you mean by that? I go, look, in trading, if you lose, you just have to, you can't ruminate. You take your lesson and you move on. There's no room for rumination. You gotta forget. You literally just have to forget your losses. You know, you should reflect on them. You should understand why you did it. But I've seen so many people get caught up and like dragged down by their losses. And I think the most important thing you can do is just move, okay, it happened, move forward. It's done. Right?
Yeah, forget your losses, but remember the lessons that led to those losses. Like selling my punk, it felt like a weight was lifted off my shoulders that I didn't even know was there. Suddenly I'm free to do new stuff with that money. And basically what I would say also, just, zooming way back out, also advice for people in their 20s, also advice for traders, is the most valuable lesson you can learn from trading is how to change your mind. Most people remain a Democrat or a Republican for their entire lives, and trading teaches you to constantly question yourself and reevaluate things. And
you have to. I mean, look, if a trade isn't going your way, you have to cut it. I mean, there's no option, and you can't feel bad about it.
Yeah.
I mean, there's so many trades in my life. I mean, like recently, I can think of a horrific trade where I bought Galaxy at like $23, and then I sold it at like 23.5 because it went sideways, and I was like, I oversized this, and then it fucking went to 40.
Yeah.
Down
to your target level though. It's where's it?
No, it's at 31. It's at 31. Trust me, it's not back down there. I wish it were.
I think 31's a buy. I love the Galaxy. Novogratz is going to crush it. He has already.
Novogratz has certainly already crushed it.
He's going to keep crushing it.
He is the definition of crushed it.
That guy's the honey badger.
He's a fucking honey badger. He's the king of honey badgering around.
Rocks a Luna tattoo.
Did he get rid? I don't know if he got rid of that, but whatever.
He said he kept it because he wanted to retain the lesson, Avi. He wanted to remember the lesson but forget the loss,
Yeah, I like my mentality is forget and move on, because like I mean, you obviously keep the lesson, but I think that also there's over intellectualizing of, I think in general, like generally in life, people over intellectualize a lot of stuff. One of them being, oh my God, you have to like be super analytical about everything that you've done, and like look at it and saying they don't. You should be reflective and you should be analytical, but like you don't have to write a thesis on every trade that failed.
It is funny you put it that way, because like trading, you're just subjected to this constant mega fire hose of information. So you have to train yourself both to, change your mind on the basis of what's coming through, but also discard a lot of information that isn't relevant to like the most critical stuff. It gets me in trouble in my personal life sometimes. Like my wife will be like, we're going out with Leslie on Wednesday night. I'm like, who's she? She's like, I told you 35 times, it's my cousin. I'm like, yeah. Okay, maybe that isn't going to help me make money, but now I need to remember it. So, it's like trading is this weird semi-clinical problem, but it's also a superpower if you harness it properly. And
it is absolutely the greatest thing, the greatest skill that I have ever learned in my entire life is to compartmentalize stuff. Yeah. It is so valuable because other people, I think like, especially when if you're an emotional person, like you just can't trade. You just can't do it. Like I just give up. Like if you cry, if you like go to a movie and cry, like you're not going to be a trader. Like, I'm sorry. if you like, if something bad happens in your life and it takes you like a month to get over it, buddy, like you're fucked.
Yeah.
I'm just being honest. You really have to, because trading, this is great speech. And I'll end it with this, Rafael Nadal. Have you seen this?
No.
Oh, no, sorry. Federer, not Nadal. Federer is giving a talk. Sorry?
I love him.
He's awesome. He's giving a talk to a college. And he goes, I won 80% of my matches. But how many points in all of those matches do you think I won? The answer is 54%. So he won 80% of the matches, but only 54% of the points. He barely, it was a coin flip, basically, whether he would win the point or not. It was like he became the greatest of all time by a razor thin margin, right? He lost almost half the time, and that's kind of what trading is. It's you're going to lose a tremendous amount of the time, and you're going to get kicked in the face, and you're going to get put on the ground, and okay, who cares?
Just got to get back up.
If you're look, if you the greatest trader of all time, Stanley Druckenmiller, I would guess probably has like maybe 55-60% hit rate on trades.
I would say the greatest trader of all time is Jim Simons, who is still the #1 hedge fund manager.
Okay, well, Jim Simons is different
from the grave, but yeah, fair enough. I would also
like if I got a printout of the statistics of Renaissance, like my guess would not be that they win more than 60% of their trades or 70% of their trades. My guess would be that they make a huge, tremendous amount of trades.
They win 60% of the time, all the time.
and they make a tremendous amount of money, because if you win 60% of the time, that compounding is unbelievable, especially if you make a ton of trades, right? And my other guess would be that their winning trades are much larger than their losing trades.
Yes. Win big, lose small. That's going to be my mantra downstairs at the roulette wheel in a few minutes.
Are you in Vegas?
Of course. It's a short drive.
What?
Yeah.
You have Vegas on your computer, Jonah. What are you doing in actual Vegas?
It's true. I'm a boomer, Avi. That's what happens to people like me. Sometimes the urge just hits and you have to go.
I appreciate it. I respect it. The old school. This was great, Jonah. This is a really fun one.
This is awesome. It's good to have you back, man.
It's good to be back.
Avi's back. The market's gonna rip. We're all gonna make money.
We're back.
The government's gonna open up. The tariffs are gonna get reversed. The money's gonna be raining from the sky. We're gonna get stimmy, and crypto's taking over the world. So I wouldn't be scared. I'm not. I'm excited. I think this is the dawn of a new, steady bull market.
Let's do it, Jonah. Adios.
Speak soon. Later. Nothing said on the 1000X podcast is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed.